Emmanuel here at Financial Hub. This week we're going to do a fundamental breakdown of what we see is going to happen globally in the foreign exchange market, and after that we'll do a small breakdown technically of what we do on the charts and how we approach the markets. So stay tuned, and Ken is going to take it from here.
So from a fundamental perspective, we'll pay special attention to some of the currencies under the G10 currencies, and to be specific, we'll pay special attention to the dollar, the euro, and the sterling pound. So for the dollar, yesterday we saw Trump, the President of the United States, impose 10% tariffs on 200 billion worth of Chinese goods. This led to the Chinese government walking out of the negotiation talks that are going on between the US governments and the Chinese governments. But the Chinese government has not yet responded with tariffs on any of the US goods. Could this lead to a trade war? So for the euro, on Monday we saw the ECB governor Mario Draghi cite a hawkish tone on interest rates after he was quoted saying that inflation was picking up under the eurozone. This came as a surprise to the market, leading to the euro spiking up from the 1.17 region to the 1.18 region, making new monthly highs. This is because we expected the ECB to start tightening during the summer of 2019, as they had earlier indicated. This week on Thursday, we expect some fundamental news to come out associated with the GDP growth in the UK. So that's only the fundamental analysis. I think we'll dive straight into the chart breakdowns.
Yes, guys, this is the analysis, the chart breakdowns. So for the chart breakdowns, I'll maybe break down at least 5 pairs. So I'll start with euro dollar, then we'll maybe do the sterling, and we can go through euro yen gold, and maybe sum up our day with going through maybe GBP AUD or the DXY. We'll maybe do the DXY so that we understand what the dollar and what you expect on the dollar. So this is the euro dollar weekly chart. As you can see, my levels are already marked. We had some straight leg downside bearish momentum, then we had some consolidation before there was a continuation, but a quick rejection on the 1.330 zone, and from that time we have been seeing some bullish momentum coming into the markets. Perhaps we could get a pullback of this initial move, and if we are getting a pullback of this initial move before the real downfall and the collapse of the euro, then we could maybe expect the markets to go all the way to the 1.1945 region. So as you can see, my moving averages are almost crossing over. Last week we had some strong bearish momentum after this rising three methods pattern, meaning we could see some bullish momentum to the 1.1945 region. However, expect some downside bearish momentum before the real bullish momentum comes to this point. And if I maybe step down to the lower time frame so that I can show you what is going on the daily charts and the 4-hour chart perhaps that we use for execution. We will use the weekly charts to understand what has been going on in the markets and to get a big picture understanding of what is going on in the market. So this is my daily chart. As you can see already, there is a higher low, higher high formation. You already have this higher low, higher high, then you have this higher low, and you have made new highs. So for these new highs, you maybe expect a pullback since you have made new highs at R2. And yesterday we closed as a doji. Tomorrow we're expecting some decisions on the interest rate decisions, and this could affect this pair. So perhaps today we could not see the dollar. Today and tomorrow we could see the euro just consolidating before we get the real decision on the interest rates. So if we get we could maybe see a pullback before we see the real bullish move. We could see a pullback to the 50% level or 61.8 region before we get a quick move now to the next key level, which is 1.1450. But for now I'm bearish on this pair, and if I go to the 4-hour time frame, then I'll show you. This is my 4-hour chart. As you can see, these higher lows are now clearly seen. They're more precise, as you can execute trades better on this lower time frame. So like you've executed a trade, I executed a trade here and came out to this point. There was this slight consolidation before they move to this point. And there's this drop, and with this we have a double top formation at R1, and you can see the markets are clearly rejecting this higher level of 1.167. So you can maybe see some bearish momentum with a crossing over moving averages, perhaps a break of the trend lines, or the markets will be held by these pivot points before we get the decision on interest rates. So for euro, I'm currently bearish, but for the long term I'm bullish on this pair. So that's euro. I'll maybe go down to Euro Yen. So this is the Euro Yen weekly chart. I always have my levels marked, and I know my levels on my mind. I have my levels marked, and I know when the markets get to this level, what I'm expecting, which are the major levels and which are the minor levels. So this is my Euro Yen chart. As you can see, the Euro Yen has been making lower highs and lower lows, but we recently had a break of this descending trend line. It was broken last week with some strong bullish momentum, and we went higher. So this is Euro Yen. We maybe expect some more bullish momentum to the 134 zone, but that's from the weekly perspective. Maybe expect to see some more bullish momentum with a break of the 132 resistance zone. So this shows that there's some bullish momentum coming into the market. So if I maybe step down to the daily chart, this is the daily chart. Maybe zoom in, yeah. This is the trend line, as you can see. Let me get this one out first, and I'll get this moving average. Look at the Fibonacci. The charts are clear. So this is the Euro Yen chart. Low highs and low lows have been the order of the day, but we recently had this Gatly bearish, a bearish Gatly pattern, but it was not completed. We were quickly rejected by the 125.5 region, forming up a double bottom. This double bottom, by the way, we've broken the neckline. This is the break of the neckline, but it's a slight break with some consolidation. You can see a 3-pin pattern. So perhaps we could see some bearish momentum coming into the markets, pushing the markets lower before we get to the real bull move. So that's an ascending trend line. And if I use my Fibonacci tool to try and get some retracement levels, then yeah, as you can see, there's a lot of confluence aligning at 134 zone. The 134 mark perhaps is the next level, but before we get to the 134 zone, we maybe see a pullback to this R1 region, which is the 130.5 region, before going higher. So I'll maybe highlight it for you to be able to see it precisely. So that's basically what's been going on the Euro Yen. Euro Yen and the Euro Dollar have been going almost the same direction for some time now, since the dollar and the yen have been performing almost similarly. So that's Euro Yen on a daily chart. Perhaps if I go down to the lower time frames, the 4-hour time frame, see if there's any setup that can be executed. And on the 4-hour time frames, we have, this is the 4-hour time frame. As you can see, we have lower highs and lower lows. I have a channel, in fact, which has been almost complete now. The channel is almost complete. You can see R1 rejecting. So clearly executing long trades right now is not a good idea. The probabilities of us going higher are significantly low. So we could maybe see a pullback first to touch this trend line the third time before going higher. And if I use my, so we could maybe see a pullback to these levels. And I'm already short on the lower time frames, but I won't show you my setup on the 1-hour time frame. I'm expecting a quick fall of the markets perhaps tomorrow after the Feds make their decision. So as you can see, MAs are almost crossing over, and we're clearly rejecting around. So perhaps some downside momentum towards to the 130 or the 130.5 region. So that's Euro Yen. Then I can maybe go down to this is the British Pound 1 day, or I'll start off with the weekly chart. So as you can see, this is the weekly chart of. We recently had some higher lows, higher highs until we had this consolidation, and then we had this downfall, which has no pullback. Last week on Friday, we saw a quick fall from the 1.33 region, as I earlier indicated on the fundamental analysis, which led to the formation of this gravestone doji and a rejection of the 21-day moving average. What does this mean? It means that we could see some bearish momentum coming into the markets before we get some bullish momentum. And if I step down to the daily time frames, then you guys can be able to see what I'm talking about. This is the daily time frame. As you can see, this is the daily time. Okay, let me get this one out first. This is the daily time frame. So on the daily time frame, we actually have this. No. This is the daily time frame. We actually have this trend line with a higher low, higher high formation. And if I use my Fibonacci to measure, the market pulled back at this 50% level here, completing the ABCD pattern actually at the 61.8 extension level for going down lower very fast. So if I use my Fibonacci tool and try to get the next retracement before going higher, yeah, and the next level I expect in fact to be hit is the 1.35 region, and you can see I've already marked it after we take out the 1.33 region. But before that, we'll have to go significantly lower, perhaps to the 1.3 region. Yeah, maybe 1.3 region, so 130 pips to the downside. And if I go down to the 4-hour chart, yeah, so this is the 4-hour chart. You could maybe execute a trade from where we currently are. Okay, is this Fibonacci that you can use? You can use this Fibonacci to try and get a good entry level into the markets. But as you can see, the markets have not clearly rejected the 15% level, but are rejecting the 1.315 region, which is also in confluence with the pivot points. S2, which is in the 1.3 region, is also in confluence with the 27.2 extension. So you can maybe see a pop up to this level before going down to this level, but I'd be looking for short plays. Any trade that is any market movement that will be below R1, I'll be looking for short trades to execute to 1.30. You can maybe see a move to this level before getting the real short play, which will come from that level to this level on sterling. We expect some news on Thursday, but we don't expect some big impact on the markets since the news they don't have much significance really in the markets, unlike Brexit negotiation and the geopolitical risks that are involved in the market. So I'll maybe go down to gold now. Gold is a precious commodity. I really love this commodity, a very directional commodity. So for gold now, we have this ascending triangle which was broken, but I think it was a false breakout. I'm expecting gold to take out 1360, which is okay. It's relatively high for now, but I've been stocking gold for some time now, and the performance of gold, and I think gold is really undervalued. Anyway, technically the markets took out this trend line, were supported by the 1175 zone. I was calling out for this zone as we were starting this downfall. And you can maybe check on our site on some articles. We called out for 1175 some long time ago. Okay, we rejected 1175, was supported by S1. We had this bullish momentum, and now we have this rising three methods. As you can see, this pattern already. We have some rising three methods rejecting this 8-day moving average. So what do I expect of gold? If I go down to the lower time frames, perhaps I go down to the daily time frame. This is the daily time frame. I'll maybe get this off. I'll maybe get that one off. So this is the daily time frame on gold. Yeah, I have 1240. I have 1175. We have this consolidation which I'll mark for you. And gold can sit in this consolidation for quite some time without breaking out. But when it breaks out, the movement it moves a lot. It moves a significant number of pips. So if I use my Fibonacci tool and try and get the retracement level that has been holding gold, then you'll find that I'm getting the 50% level, of which in fact this Fibonacci tool should be from this level. Yeah, from that level, those two candles which have been bullish, extremely bullish. So for now, gold has been sitting in this consolidation, being held by the 78.6. So for gold, I'm waiting for a breakout, but I'm favoring a breakout to the upside. If we don't take out 1190 zone, then I'm favoring a breakout to the upside. But for now, I've not been touching gold. I've been stocking gold and watching gold. But I'm waiting for a reversal and perhaps a complete reversal to the upside, taking out the initial high which was 1360. But for now, I'm still sitting tight, waiting for a breakout of this consolidation on gold. So for gold, perhaps you can sit and wait for a breakout of either 1190 to the downside and 1210 to the upside. Okay, what does it mean? If 1190 is broken, then we can expect lower lows at the 1140 zone. But before we bypass to the 1140 zone, we maybe have S2 over here, which is at 1155. But my next key level is 1140. To the upside, if we take out 1210, if we take out this 1210 zone, then we can maybe expect the markets to go higher, to maybe 1220 or 1225 before we make the next decision. So that's basically what I expect on this precious commodity. I don't even, okay, let me, on the 4-hour zone, on the 4-hour chart, I mean, you can trade this consolidation pretty well by buying low and selling high. This is my 4 hour zone here, as you can see. My 4 hour chart, I mean. As you can see, I have my two zones marked, which is 1210 and 1190, and you can see the markets have bounced off 1, 2 times. The third time came back lower, then the fourth time, and they are now going lower. So if we perhaps bounce off this S2 region again, could maybe go higher, but gold has been ranging for quite some time now, and if we get a clear rejection in S2, then I'd be a buyer pushing it higher to the 1210 zone or higher above 1210 zone. If 1190 is taken out, then I'll be looking for short plays to go lower with gold to 1140 as I earlier indicated in my charts. In fact, there is this break of this trend line, and I'm sure a clean retest of this trend line. Yeah. As you can see, we had a break of this trend line and a good retest of the trend line. So it means we could see some bearish momentum to 1190. If you are a short-term trader, you could maybe get this 100 ticks from 1199 all the way to 1190. You'll execute those short trades and you can maybe place your stop loss above the moving averages and above the 1200 zone, and you could maybe make up to 100. So I'd perhaps execute this short trade from this zone. Yeah, it's just a short play, and my stop loss will be actually above that zone. So good risk reward of 1:2 roughly. So not really a bad trade, about 90 pips. But this analysis that we offer here is not a way for you to follow. We just expect you to blend this with your own analysis and come up with your own ideas. Don't just follow this blindly without doing your own analysis and stocking the market. So we'll clear our analysis with the DXY, the dollar index. This is the weekly chart of the dollar index. Okay, let me just leave it that way. Yeah. As you can see, we rejected this level, which was the 96.5 region. And then it came low after breaking up. It was a false breakout of this pivot point actually. And it came low and have been held by the 94.2 region, rejecting that zone 2 times. So what do you expect for the dollar index? Perhaps we can go down to the daily time frame to get precisely what is going on. So on the daily time frame, if I refresh the chart, okay. So that's the daily time frame. As you can see, we had this ascending triangle, a breakout which was almost a false breakout. I don't believe this triangle was completed. Then it came back lower, we were held again, which was a false breakout. We came back, but this time, instead of going to take out and make new highs, we made a new lower high, and they've been going down to S2. Now S2 is holding us. So what do you expect? You could maybe expect a pullback on this pair, a slight pullback before going lower. So if I get this trend line off my chart for now, maybe get this one on. Okay, so we have this trend line. Yeah, break of this trend line wouldn't really be significant, so I'd avoid it for now and try maybe using my Fibonacci tool, because I think that will be more reliable to try and get the pullback zone. A break of that trend line is obviously going to happen and happen soon. So as you can see, yesterday we rejected the 94.2 zone, as I'm saying. We maybe see a pullback to this level, the 95 zone, before going lower to the 93.5 region. So for the dollar index, we can maybe expect a pullback to this zone before going lower. This means that the short plays on euro could really be as reliable, since the dollar index is 60% correlated to the euro. So that's basically what I'd go through, and to do a wrap up, I'd maybe say, okay, this is Bitcoin, and you can see Bitcoin actually did some analysis on my Instagram yesterday, and you can maybe go and check it out. You can see I earlier indicated that we could maybe going short, and you can see the markets have already started going lower. We have an descending triangle, we have lower highs, lower lows, and we recently had this lower high being formed. So you can maybe expect a collapse of a break of this 6,000 mark and a collapse to the 4,500 mark or 5,500 mark. So yeah, that's basically what I've been calling out at Financial Hub. That's basically what I've been analyzing. I can't go through all the pairs that we trade over here, and I can't go through all the charts that we use in the markets, but that's a brief wrap up of what we do, and I believe that will be of help if you combine it with your analysis. So that's all, and may you trade safely and may the pips be with you.